Hi everyone, Salim Sufi here. Welcome to the second session of the Finance Business Partnering. Hope you can see my screen and hear my voice clearly. If not, let me know. Now today is the second session of this topic, Finance Business Partnering. So I already shared with you several concepts and several ideas related to this finance business partnering. And usually the second session is used to be mainly for question and answer, but I thought that maybe it's very difficult to fit all the contents in one session, so I'll continue with the second session as well. But doesn't mean that it's a full coaching session. I'm expecting a lot of questions from you based on the original contents I shared with you last week. So these are all practical ideas. It's not the theories we are learning here and you only develop your knowledge. You need to apply this practically. Otherwise, you are wasting your time if you are not applying practically. So first session, I gave you ideas. Second session, I expect that you at least have contemplated, at least have thought about it, at least have thought of the limitations, what are the challenges, and then bring those challenges question back so I could really help you with that. So feel free to drop your questions in the question box and I'll pick it up from there and then we can discuss it. In the meantime, so what we discussed, let me remind you, besides the basic definitions and things like that, I think the main ideas we talked about, that first you need to develop an attitude of service orientation, giving service, support, not really controlling the business. Now you do control business, keep in mind. I'm not suggesting that you forget about the controlling part of the finance function. You do, but you do in such a manner that your image and brand is developed as a support person, not really a controlling person. And I shared a couple of examples from my career as well. So that's one thing. If you are CFO, think seriously about establishing and making this function a little bit more robust, because this really is your representation in the organization. This is the function which is usually interacted by the non-finance departments, and that is how they really understand what finance is. So if you are finance business partner, or if you are CFO who can control and create this function, then this is very it's a high leverage function if you could create one. So we talked about some of the capabilities. We talked about how to really adjust the balance from the decision support, from transactional support to the decision support. Now, let me emphasize one more point. In many literature, many books, many advice regarding finance business partnering, those advices only go to the extent that they ask you to develop more analytical skills and learn advanced things, advanced module on that. My advice goes a little further. I would suggest you to really become an effective, successful business partner. You need to learn business, not only analytics, but learn the business part, especially the strategy part. So what I'm going to do today, some of you might question that, look, if I need to learn business, how much could I learn? I'm a finance expert, I'm an accounting expert, right? You already qualified as a professional accountant and you know enough of it. Then now, do you need to learn all marketing? Do you need to learn all HR? Do you need to learn all production? It's not like that. But what you need to earn, how a business is run, how the business makes money at broader level, high level. So once you, rather than starting from bottom up, that you are learning marketing, you are learning operations, you are learning quality, you go on the top of the business and you try to understand from a CEO point of view how the business makes money. And once you start with that approach, everything clarifies to you. And that is how you really get involved into the business. You don't need to really go function by function, department by department, but understand the overall strategic model of the business. And that's what I'm going to do today. I will teach you a high-level concept of value creation, how the businesses make money, how they create value. And if you understand that, you can handle any other function, which means that you never are expected to really work in marketing. You never expected to work in HR or production or logistics, but you are expected to work with them. To work with them, you have to have enough idea about the overall business, not about the marketing functions expert, but overall business. So you could relate the main business objectives with the specific departmental or functional nature of those operations you are interacting with. Look at this slide. It also talks about their financial competencies and business competency, but they are mostly talking about analytical tools. So insight into the, it's really vague. I mean, I don't like this type of slides, although this is from some of the professional accounting institute. They don't give clarity. What does it mean? You are looking as a finance professional and you're saying, okay, I need to move from the financial competence to business capabilities. What does it mean? Provide insight into the future. Now, what does it mean? What do you need to do? Creative and articulate. Handles ambiguity. These are itself very vague terms to explain what you need to do. So I'll explain you exactly in tangible terms what you need to do, and these things would come automatically because these are really the means. These are the results of those knowledge development which will come to you, and that is how you will utilize them. Also, this slide is coming from the CMA Chartered Institute of Management, and it does say value creation, but it's really not explaining very well what does it mean, what you need to do. Close collaboration, increase emphasis, greater emphasis. So it's a guideline, but it really does not give you practical insights. I included it because these are from the very reputed professional institutions. Okay, business analytics, we understand that. This is also from Chartered Institute of Management Accountants. This little bit where show high-level leadership skills, business skills, profile skills, technical skills, but doesn't go beyond that. So let me take you to what I want to really cover today. I'm just trying to ensure that if there is any area which I need to just re-emphasize. Is there any question from the last session which was not answered from my side? Well, there is no music from my side, at least. Someone is saying the background music is distracting. There is no background noise or music from my side. Just double check your computer and surrounding. Maybe there is autoplay music. Okay. So I suggested, if you are a CFO or if you are a controller, use the finance survey. One of the dilemma with finance professionals or CFOs is that most of the time they think in their mind that they are doing a fantastic job, or they are working very hard, or they are doing all the things which they should do, and there is not enough appreciation in the organization. That's a general trend. Complaining. Now, first of all, if you have not done a structured feedback survey, you probably don't know the truth. You are already living in your world and you are feeling that you are working very well and other people are not appreciating, and you're not giving them a chance to really give you the true feedback. So usually people don't tell you these things in social talk or in direct face-to-face interaction. Usually this is done through a structured feedback, which means that you create a survey and you ask those questions in a very structured survey or feedback, and then probably people who could provide you answers to those questions. So that is one thing finance department or accounting department has to do and they don't do. And then seriously take that feedback into account and see what are the areas you need to really improve. At the individual level, what happens that if you are a financial analyst or you are a finance business partner, you go to operations, non-finance areas, and you are talking to the chief marketing officer or sales officer or anyone, and then you look at their financial numbers and you start criticizing them that you are not making money. You think that you are serving the business. You are basically creating more conflict in the functions. because there are definitely areas and there are definitely things which you don't know unless you have done uh, an MBA in business or you really know the entire business thoroughly, or you have worked in the department. You might not know those things. You may be master of accounting and know everything, but you may not know everything about marketing or sales or operations or strategy. So what you need to do as a finance professional, keep an open mind. Try to develop a learning attitude. When you go to other departments, see if things are not clear to you. Don't conclude immediately. Try to open up, ask questions, ask more and more questions. And that would also, I think there was another question from the last session. How do you build trust? Because that's really the critical aspect of the relationship where your success or failure depends as a finance business partner. If there is trust, you are really working, supporting, creating value. If there is no trust, you are wasting your time and they are wasting their time. So how do you create trust? Now, first of all, it's the characteristic of your personal relationship. Some people are naturally good in it. Some people are not naturally good in it. And you can work on it and make it better or improved. But I think the most important thing which really works to develop a trust in the corporate environment or corporate relations is your knowledge of business, is your knowledge of really your level of understanding. What are the main objective of your business, how the business makes money, how the overall resources or activities play in such a manner that it achieves business objective. So back to what I said, if you develop a good business knowledge and you talk to them, the marketing people or sales people, don't really show off, but in a learning attitude, when you share this information, that really creates a level of respect and level of trust for you, simply by showing your business knowledge and understanding. I also suggested you that if possible, you should commit yourself for a finance for non-finance presentation or training at your workplace. And this is a very smart way to make your impact on the organization in a very short period of time. So I'm not sure if you were able to, but if there is anyone who has planned to do a finance for non-finance training and training or presentation, let me know through your chat box. I need to see who is planning to do it. And this is one of the things which I insist you to do practically. Because if you're just gaining knowledge, you're collecting my recordings and replays for someday when you would find time to really go through it, that someday is never going to arrive. That someday is today. And you will never have a better time. But most people will complain that I'm busy nowadays and I have a lot of projects going on. I will find time and then I will do it. That will never come. Because you are only going to get busier with the progress in your career. Okay, so I don't see any name, which means that nobody has really committed to make a finance for non-finance presentation, if I'm right. Yeah, I already told you that I have almost everyone. I have sent the master copy of my finance for non-finance presentations, and if anybody does not have, let me know. And I think one or two people let me know, and I send them immediately. So if you still not have it, send me an email. I'll send you the copy of that. That would be great help. I mean, you do have to customize it, but at least that would give you a template. How do you want to do it? But these are the few things I'm sharing with you which really make a quick and forceful impact in your career. You have to have the courage to really take first step and initiate those ideas. So if someone has already done it, there is no sense to really do it immediately in the short term. Maybe you have to wait at least for a year to do it again. But in most of the organization, this training has not been done. And this is an opportunity because those people, non-finance people, are very hungry for this type of information. And just be careful if you said that I have planned it for future, and then future is 6 months from now, that future would never come. Your future is only the next 3 months. That is what you could commit, and probably you could realize if you are planning anything beyond 3 months, most probably that's never going to happen. So just be careful. Okay, let me take you to my new slides. Okay, so in this presentation, today's session, I'm going to show you a high-level business value creation process. And once you understand that, everything else would become very meaningful and clear to you from a business point of view. So let's talk about the business model first. What is a business model? Now, business model is a relative term. In broader sense, it means a way to explain how the business makes money, business model. There are different ways. So you look at if you Google business model, you will find a lot of different type of templates. So don't worry about that. It's not IFRS that there is only one definition and one terminology. It's a concept. And if I explain that, so business models have changed lately. In the recent past, like since the last 10, 15 years, turn of the century, business models have significantly changed. So what was the old business model? First, let's understand that. So old business model was based on capital. Anyone who wanted to start the business, they needed a lot of capital first. And if they found the capital, they would invest into the infrastructure, plant, equipment, warehouses, and they would make some products, keep in the warehouses and in the form of inventory, and then they will sell it. And when they sold it, they will make some money, create profit. That's shareholders' value, right? That was the business model which existed for centuries, very long period of time. The same model with some variations existed, and it was also very common until the last century, until the 80s, 90s. Even today, many businesses operate that, but that model is shifting, switching very fast to a new business model. So what is a new business model? Now, before we go there, just try to understand this business model also from the point of view of accounting framework we use. In accounting framework, we have balance sheet, right? On the one side of the balance sheet, we have sources of money. So your shareholders bring money, your banks provide money, and some capital comes from the supplier's credit, right? That's the liabilities and equity side of the balance sheet. We call it sources of money here in this diagram. Where this money goes? This goes into investments in assets. So what you see on the left side is the uses of money. They are invested in fixed assets, investments, inventories, receivable, those type of assets. It's called a source resource model. So on the asset side, you have resources, and on the other side of liability and equity, you have sources of those resources. The way businesses make money, all the capital which is coming from these three sources, they invest into the assets, and then they run their operating cycle, whatever it is, manufacturing, selling, marketing, developing new products. And once they run their operating cycle, they are expected to create more value, which means all the costs they have spent or incurred in their operations, they sell those products and services at a price which is higher than their cost. That is how they make money. And if they do it successfully, they keep running this cycle again and again. And every time they run this operating cycle for a profitable business, they create more value. So you see, if 100 is invested into the business, 105 comes up, for example. That is how they make money. So that is how also financially, if you look from a financial point of view, you are growing your assets. Because every time there is some profit, if that profit is not distributed, that profit stays on the balance sheet, right? On the liability and equity side, you call it retained capital or retained earnings. And on the asset side, that retained earnings is reinvested into the business, and that is how the value of your assets increases, right? Now this model, this accounting framework works very well with the old business model, because in the old business model, if I could show you again, we have this capital, we have this fixed assets, equipment, then we have inventories, then of course there are some receivables, other assets, and then we create shareholders value. So this model works very well with the accounting system, traditional accounting system. And by the way, I'm sure you know that the accounting system we are using today is more than 500 years old. It was invented somewhere in 1500. And today, the most complex business models we are trying to run and support through that 500 years old accounting system. So it's not working. Now, what is a new business model? That's very important difference to really understand if you want to support your modern businesses. In the new business model, the shareholder value is still there. That's very important because these are the stakeholders who bring the money into the business and they need return somehow. So shareholders value. Now, the modern businesses have understood very well. The best way to create shareholders value is to first create customer value. Now, this concept was not there in the old business model. In the old business model, they did not talk about customers at all. In fact, you might have seen that quote from the history that when someone suggested to Henry Ford that why don't you make cars in different colors because people are looking for different colors, and he said that yeah, they can buy any color as long as it is black. That was the importance of customer or respect of the customer. It was sellers dominated market. Today's markets mostly are customer dominated. Customer really define the rules of the business. So that is how customer has become very important, and smart businesses, successful businesses understood that very well. Now, just for your interest, the change happened somewhere like 70s and 80s when the Japanese started to invade the North American markets with their automobiles and electronics. At that time, the US manufacturers woke up because people started to prefer Japanese products over American products. And that is how they realized that customer is important. Customer preferences, customer taste really matter. And since then, the idea of creating customer value significantly increased. So how do you create customer value? Well, customer value is created by branding, by customer relationship, by creating customer loyalty. So think of Apple. Apple has a very strong brand. Now, if you compare the Apple products technically, and I did that actually last week, I was comparing the iPhone 10 with Galaxy Note 8, very comparable products. I was shocked because technically iPhone 10 is not much superior. There are some differences, there are some advancements, but not as much as people believe. And why people believe that iPhone 10 is going to be a miraculous future product? Because of branding, because of marketing, because of perceived value. So Apple hasn't done anything wrong. In the modern business model, these things matter. Branding matters, customer relationship matters, loyalty matters. That is why people line up when a new iPhone is released and try to buy those products. I haven't heard of any lines for Samsung Galaxy, although it's a very, very comparable product. It creates value. When you have a high perception of Apple's product, that's a customer value. Because you would, as a loyal customer, when the iPhone 10 is released, you would line up and you would pay more than $1,000 to get that iPhone 10, which creates value for shareholders. High profit. Apple is very profitable, I'm sure you know. Apple is in their industry, they have the highest level of margins and profitability. So customer value is very important to create shareholders value. And how do you create brand, relationship, loyalty? Also, fantastic products. I'm not saying that Apple does not have good products. Apple has outstanding products. But to make success in today's complex environment, that's not enough. You need to do a lot of things to enhance it. So not only that Apple has very highly functional technological branded products, but they have high level of loyalty and relationship with customer and very strong brand. By the way, Apple brand has reached to the highest value. It used to be Coca-Cola, which has the highest value of brand. Today, Apple is the most valued brand among all the brands in the world. That is how they have created success. So look at this model. Now, where do you start? So you don't start with the capital in the new business model. New business model is starting with employees mainly. Capital is a commodity today. Banks are sitting on tons and tons of cash. If you have a good business proposal, you can borrow the money. That's not a problem. The problem is to find right people. Talent is in shortage. Look at the most successful businesses today. Apple, Google, Microsoft. Who are behind? People. The people are their biggest asset. So in the new business model, the first challenge is to find the right people. And not only that, you bring the right people, you enable them by providing the right support, and that support is technology. You create the systems in the organization, you create the right culture, and you bring the right leadership. This is called employee enablement. Not only that employees would do their job, but you have to create the right environment and facilitate the delivery of their best performance. Then they would create fantastic products, brands, relationship, loyalty, and create customer value, ultimately to be translated into shareholders' value. The difference in the new business model and old business model is very important to understand. Employees come first, then comes the technology, then comes the culture and leadership. And all these things together, they create a lot of value in the business system. Now think of the accounting model we just talked about. And in the accounting model, we have the capital, we have the typical balance sheet. Look at this new business model and tell me, where would you show customer value? And we just learned that customer value is very, very important, right? Where would you show customer value? Where would you show relationship? Where would you show brand? Where would you show people? Where would we show culture and leadership? Nowhere, right? Because these concepts do not exist in accounting. That's the biggest dilemma in today's modern businesses, that the businesses have transitioned into something which is based on highly intangibles. As a matter of fact, I just read through a study which says that if you look at the most successful businesses today, top 50 or top 20, their intangible assets are almost 80% of their total assets. And this is true because Apple, I think, is running somewhere like $700 billion market value. Their assets value on the balance sheet is around 150 billion, I think, 150 billion. Same is true for Google, same is true for other companies. So all these customer values, brand, relationship, employees, they do have a value, but these values do not reflected on the balance sheet or the financial statements, right? That's the big difference. Now I'm giving you very high level, broad picture, macro picture. So don't worry if you have difficulty to relate it with what you do on a day-to-day basis. And if you have any question on these ideas, you can drop in the question box. I'm looking at question box at the same time, but I'm not finding anything yet. So I hope you are listening carefully. Okay, so where do we go from here? So there are few characteristics of the new business model we need to understand, which we have already discussed, but let me re-emphasize. Number one, capital does not matter anymore. You still need it, but it's really not the critical resource. It's cheap, it's available, it's a commodity. And dominance of intangibles, which means people really matter, technology matter, culture matter, brand matter, leadership matter. And again, look at the my favorite example of Apple. Everything is there as a successful business model. Now, value creation cycle or operating cycle, as you call. So what is operating cycle? Traditionally, you buy raw material, you bring into the manufacturing facility, you process them, you convert them, you manufacture products, then you deliver to the warehouses. From there it goes to the distributor, you sold to the customer, and customers buy it, and the customers pays you. That completes the one operating cycle, right? Value creation cycle is the new name of operating cycle. It's broader. It's not only about money, because it would translate into money, but later on it would take a long time, but it's much longer. For example, the value Apple is creating today in their business based on the brand, it's not that they invested into brand yesterday. They are investing into their brand for the last 10 years. They are creating customer loyalty for the last 7, 8, 9, 10 years. It's not today or this year only, but they will take big benefit today in terms of the sale of iPhone 10. When iPhone 10 is released, look at that, what's going to happen. So efforts have been done long time. I mean, if you look at their value creation cycle, it's over several years. Compared to the accounting assumption, which assumes most of the time that your operating cycle is completed in one calendar year, this is no more true. Now, in some industries, it is still true, but in most of the cases, value creation cycle is much longer. And the life cycle of products and services is shorter. So although it takes longer time to ultimately create value for shareholders, but you introduce product and services in the market and they run out very fast. So every year Apple has to bring a new version of their iPhone. So life cycle of product and services is shorter. Now business models, like we are talking about, is also changing very fast. So business model used to be a long-term thing. It's still a long-term, but changes are more frequent, more common. So look at Amazon. Amazon is about 15 years old company, but they have changed several times their model, several times. And most of the time, they made positive changes which mean create more value for the business. So people are the most critical resource. Unfortunately, we don't count them in accounting and finance system, right? So keep these ideas in your mind. Don't think too much, but look at the conflict and the difficulty to really operate a business, manage a business, measure a business, or managing the performance through the accounting and finance system. So let's talk about the flow of value creation. We talked about value creation a couple of times. Let's see how does that value is created. So as I said, that ultimate objective is shareholders' value. Now, limitation of accounting model that it really assumes that all cycles are completed in 1 year is not true. So even today's shareholders are not concerned whether their cycle is going to be completed in 1 year or 2 years. They are very patient. They could wait longer time. When companies invests into brand and long-term research and development, they are patient because that money could be distributed to them as profit, but it's reinvested into the business. And they know this is the right decision because it would create more value in future. So that's shareholders number one. Now, as we said, customer value is basically the driver for shareholders value because customers are the ones who create value in the business. If they don't buy your product and services, nothing is going to work. And how do you create customer value? Employees. So employees create value for customers, customers create value for shareholders. Broadly, there are many processes where employees directly work creating shareholders value, but broadly, this model works. And for many businesses or almost all businesses, three most important stakeholders are shareholders, customers, and employees. Now, in the traditional business model, shareholders used to be the most important stakeholders, used to be. In most businesses today, it is the customer who is the most important stakeholder, not shareholder anymore. Now, some businesses have even gone beyond that, and they say, no, employees are the #1 stakeholders. Companies like Southwest Airlines, they publicly say that employees are the most important because employees create the value for customers, and then customer create value for shareholders. But most businesses say customer value. Now, how employees create value? As I mentioned earlier, two things: technology, systems, process, structure. These are the enablers. If you bring the best employee from the best company like Apple, and you put that employee into a very lousy, small-scale company with no systems and culture, that employee is going to fail, right? That is how the important the systems or enablement is. Similarly, if you take a lousy employee from a lousy company to Apple, that employee would also fail because the systems, technology itself cannot make that person work. Two things work together: talent, technology, system, structure, and processes, and leadership and culture on the other side. These three things combined create a lot of value for customers. And again, as I said, it's a very high-level model. What is customer value? Good products, good services, good customer service, good warranties, good feeling, good perceived value, good branding. Customer feels good when customers buy Apple products, they feel good, which means that they are having a lot of value. Why people would line up night before? Because they feel they are going to get a lot of value, much more value than what they are paying for. Most of the successful brands, why people pay 3 times the price of the regular coffee to Starbucks? Because they see value. Coffee may not be 3 times better, but it's the perceived value, the perception on which these businesses survive. So this is a value creation model for most businesses. Let me look at the question box. Okay, I just clarified that what I'm suggesting is not that businesses could be started without capital. I said it's a commodity. It's less important. You can find it easily. In the traditional model, it was very critical that without capital, you couldn't start the business. But today, you can borrow the money and start the business. Yeah, so your question, Ravi, regarding how we can create value as we are not decision makers and management might not accept it, it's a little premature. Let me cover the concept. As I said, I would not be covering the whole idea in detail, but you need to understand broadly. As I said, just be careful. Don't try to take those ideas and start applying your day-to-day things you are doing, because that would create more misunderstanding. So just hold on there to your questions. Business today is done on the basis of great ideas rather than material and money. True, fully agree. I think there should be a comprehensive slide by combing old business model and new business model. My question is how it would be. Not sure, Khalid, what you mean by that. I think there should be comprehensive slide by combing old model and the new. Please rephrase your question. I couldn't really get it. Okay, for accounts, all other departments are as internal customers and how we add the value. Yeah. So this idea of internal customer has become a little bit controversial. They are definitely, in a sense, they are customers, but many business leaders have argued that that dilute the importance of the real customer, because really there is no substitute of real customers. And everybody, whether they directly deal with the real customer or not, they should focus on the real customers and think of the ideas which creating more value for those customers. So yes, internal customers so-called are important, but you need to understand the whole business model. That's the whole point of my talk here, that if you understand the overall philosophy of the business, how it creates value, you would be able to support the person you are supporting directly, like a professional in marketing department. You would be able to support him without really knowing in detail what market functions are, as long as you understand the overall philosophy. So just hold on your thoughts, and in the next 15 minutes, I'll be able to complete this topic. Okay, so customer value creation, how does it take place? We are going into step by step some more details. As I said, that it's ultimately about the creating shareholders value, right? How do you create shareholders value? Market share, price premium, longer product cycles, lower returns, product returns. And how do you create these things? These are driven when customers are loyal, when there is a brand recognition, high, strong brand awareness, customer retention, customer are staying with the company, not going anywhere, customer satisfaction, high perceived value. These are the drivers, these are the customer values which drive shareholders value through more market, larger market share, price premiums, lower returns or high margins, etc. So this is the most important slide of this talk I'm giving you here. Twofold value creation process. So create shareholders value through creating customer value. How do you do it? Number one, you create high quality product and services. High quality product and services, yes, that they create revenue, but they first create customer value in terms of the brand loyalty, brand recognition, higher retention, customer satisfaction. And the other thing is, which is much more challenging, Once you create those high quality products which customers like, your ability to sell those products and services at a price that results in profit, because only then shareholders value would be created. If you have products which are unable to command price, good price, profitability from the customer, they are not helping the business. That's what happens many businesses who fail, because they do create very high quality product and services, but they are unable to sell at competitive prices. Nobody buys them. No profit. It only results in losses. So these two challenges, like first creating high quality product and services and then selling at a price that results in profit, people think that second challenge is easy. First step or first process, creating high quality product and services, is more challenging or more difficult. It's quite contrary, because first step is not a challenge. It's only a matter of bringing resources. You deploy more resources and you could create more high quality products. Bring best people from the world, pay them best salaries, bring best material, buy best processes, bring best equipment. You would be able to creating high quality product and services. But at what price? What cost? If you cannot sell them at profit, the whole thing is useless. So bigger challenge is that not only to create high quality product and services, but to sell them at a price that creates profits for shareholders. That's more challenging. And look at some of the successful business models. And my favorite, again, Apple. What Apple is doing? Apple has not only created fantastic products, but they have made them available at highly competitive prices. These are not the cheapest prices, but people very happily pay those prices. That creates success. That is why their profitability is very high. That is why the market value of Apple is the highest at this moment, because only they are able to make their products available at very competitive prices. Most businesses struggle between the two. Either they make cheap products to be sold at cheaper prices, customer don't like them, or they make very expensive products, not many customers are able to buy it. So with these two rules, go back to the value creation process and look at this slide, customer value creation and shareholders value creation here. Value creation for customer is not an easy task. Now, it looks easy because as finance professionals, we usually accustomed to look at the financial P&Ls only. So we look at sales, we look at cost of goods sold, we look at margin, and we say profit is made or profit is not made. In reality, in the new business model, it's a lot more complex actually. Because as I said, if you look back Apple's success has not happened only this year. Apple is working on this value creation for years and maybe decades. It's a very complex process. What we do, and also look at this customer value creation transition, that you create brand loyalty and that brand loyalty create a higher market share. It doesn't happen overnight. It takes time. The challenge for finance professional is, and listen carefully, that we are only looking or we are focused on the second step only. When we try to evaluate the performance of a business, we are only looking at the second part. We are looking at the selling prices or sales, we are looking at the cost, we are looking at the margins, and then we are concluding whether the business is good or not, making money or not. We are not looking at the first step. And the first step is really the key. Because if you don't create customer value in the first step, second step is not possible. I've seen finance professionals, they go to marketing department or business department, they look at the P&L and say, we are not making money here, we are making money here, this margin is not good. They are not trying to understand what is the complexity behind it. Think, my favorite are two examples in this case. Look at the Google services, many Google services, Gmail, for example. Now, everybody uses Gmail, right? In fact, there are 1 billion active users. What do you pay for Gmail services? Free, right? What about the Google Maps? What about the Google Drive? What about the Skype from Microsoft? These are free services. Now, if the finance person or accounting person in this company look at these activities, they will say, these are loss-giving activities. Yeah, technically that person is right. These are loss-giving activities. So the business manager of Google and Microsoft are so stupid that they cannot recognize these are loss-giving activities. Well, there is a very complex, complicated game going on of the value creation, which typically accounting professionals don't understand because they are not looking at that. And with those free services, already Google, look at the Google value, market value. Look at the Google profit. They're not in a hurry. I'm sure they are spending a couple of $1 billion on these free services. So they could either stop these services and save those billions of dollars, or they could start charging a price. I'm sure not everyone, but maybe 50% of the people will immediately pay that price for these services. And they could create profit, right? Would immediately reward shareholders. Why don't they do it? Are shareholders stupid or their business manager is stupid? No, they are all very wise people. It's a new business model. We don't understand usually. So next time you go to the marketing department and look at the P&L, ask them that how do you create customer value? What are the processes? What are you doing? Or if you are in Google or Microsoft, ask them, why are we doing these activities? Rather than saying these are loss-giving activities, open up your mind and ask them, why are we doing these activities? And maybe they will explain in a better manner, because they would create more value in the days to come. It's all about the future value. Accounting system is all historical cost, looking back. Today's modern business models are future oriented. The $700 billion market value for Apple is not for its current resources. It's about the future ability of the company, what to do, what they can do. Amazon, it's about the future value, what this company can do. Potential, Google is the future potential. So that model is completely changed. So if you keep this overall flow in mind, then look what they are doing at the operational level, at the detail level, at your level or the person you are dealing with, and try to relate it with the customer value or the shareholders value or the value creation. Value creation is not about profit only, although it's very much part of the value profit, but it's creating results which ultimately lead to profit creation. You create customer value in anticipation of them creating shareholders value, right? And shareholders don't know that very well. In fact, shareholders already get that value in the short term through the market value increase. So those shareholders who are impatient, they can basically go into the market and sell their shares now and liquidate their earnings. Or they can wait, keep their money invested, and realize a bigger share. Let's also talk about what is value. So value is the difference between the benefits enjoyed by a firm's stakeholders and its cost to produce those benefits. Very broad. And who are the stakeholders? Shareholders, customers, employees, suppliers, society also. Because the examples I gave you about the Google and Microsoft, these services are not being used by their customers. We use Gmail, but we are not their customers, right? We are part of society. They are trying to create value for society. So in this, according to these broad terms, as I said, that when a customer buy a product, for example, you are assuming you are a loyal Apple customer, you buy iPhone 10 for $1,000, but you really feel very happy. There is a value of your happiness. You got the product. If you are not happy, you are neutral, then it's an exchange one-to-one. You paid $1,000, you got back $1,000 product. But no, in successful products, you get happiness. There's a value of happiness. Because in your mind, you're thinking you got more value. That's the value creation. These companies do it by design. They create products at price level where they create customer loyalty or customer happiness more than the product delivered, because they want these customers to come back. Why would you go next year back to Apple if you are happy now? If you are not happy with your product, you are not going to go back to Apple. So they are investing in your happiness because they want to run a long-term business model. That's value creation. When you see Apple brand most of the people using Apple products, they are proud of those brand ownership. They take pride in it. There are not many brands you are proud of using them. They become part of their lifestyle. Apple is one of them. Starbucks another one of them. And people for that lifestyle willing to pay a higher price. That's the customer values. Let me show you one more slide. So this is the flow of customer value. So we initially, from a business point of view, we saw that employee driving customer value driving shareholders value. But in a bigger system, in a bigger environment, these companies are focused on several stakeholders. It's not about employees and customers only. It's also about suppliers. It's also about society. Because they are so impactful that they don't ignore society, because many of the part of society would become their future customers. So that is the concept of value creation. And let me go back to the question box to see if there are anything I need to explain further. How can we have a look of old business model with new business model by combining together, as both models are extremely important? Khalid, I'm not sure what you're trying to accomplish here. These are two different models. How could we combine into one model? I don't understand. How could we do that? I showed you those side by sides to explain you the transition, but I'm not sure how could we combine into one template. You need to understand that these are quite two different things. Finance has to move from post-mortem, yeah, true, agreed. Yeah, there are so many examples, not only Reliance, as I said, that this is not a strange idea that you are providing free services. A lot of businesses are really doing that. And there is a term also used for it, freemium, F-R-E-E-I-M-U-M, freemium. So there is a value in it. Whatever you provide free, it creates a loyalty. So it's not really not free. Businesses are getting some value back. That's part of the value creation process. So next time you deal with an operational business situation, look at that situation and try to relate to the idea of value creation. Where are we creating value? So there may be several steps from that function going up to the high-level business value creation, but end of the day is all about value creation. And the most important thing to understand is the intangible part, especially in the marketing and sales area. Like when marketing people are trying to do a campaign and they're trying to get budgets approved, that benefit of that investment may come in a few years, not the same year. When they want to invest into a brand, it may take several years before it comes back. And there is no certainty. They have to take risks. That's what we need to understand. The issue is that we are trained so much in accounting concepts, which are basically about tangibility, historical cost, objectivity. We become used to look everything in black and white. We forget to look at intangibles because they have no value for us. Auditor's approach. Now, anybody talk about customer value, you may ask for verification. Where is the evidence? Now, there is no evidence. That is not how the businesses are being run today. So you and I cannot change the accounting system. At least, let me tell you, in my opinion, in foreseeable time, at least or in my lifetime, there is no expectation that accounting system or financial system would be fundamentally changed. It would remain there. But we need to work around it. We need to still serve our responsibilities. And the idea here is that, back to the concept of finance business partner, if you understand the philosophy of value creation in modern businesses, you could do a lot better job simply by changing your approach, changing your mindset. When you show your ability that you understand how the customer value is created, you become much more aligned with marketing or salespeople or any other part of the business. This approach would help you to really develop trust, mutual trust, because when they say that your ability to comprehend these concepts, they become impressed. Unfortunately, most of the time, we as finance and accounting professional, we try to show off our accounting and finance knowledge. We talk about that. We try to show that how good my memory is with IFRS. Well, that's not the point. They already know that you are a finance professional. You are supposed to remember IFRS. So they are not impressed. They think, yes, you are more and more of an accountant, or you are a pure accountant. I knew that already. You need to show your business knowledge and understanding, your flexibility, that yes, you are a good finance professional, but you also understand strategy, you also understand business, you also understand their side of the story. If you do that, suddenly your branding changes. With your personal brand change, your acceptability, your relationship, your trust will change. Those are the keys of success in today's business model and corporate environment. Okay, I'm trying to look at the question box. How to increase the commercial insight of business, discussion with operations, and also reading of books, seeing the videos, please suggest. So I think all of you sitting in this session or enrolled into this program are already doing that. This is the one very important decision you took, that on your own, most of you have come with your own investment of time and money, that you made a decision that you need to learn something, and that is why you are investing your money and time into it. That's one positive attribute. So definitely you differentiate yourself from the typical 90-95% people who would not do anything. They are not dumb people, but they would know everything, but they would not take any action. You are not one of them, at least. You are action oriented. You took some action, small even though, but at least you move into the right direction. Experts are saying that you need to spend 10% of your time. If you want to remain where you are today, you need to spend 10% of your time learning new things. And if you want to make progress, that percentage changes to 15 to 20%. Now 20% is big number, 1 day out of 5 days work week, but that is really the requirement. So, and for this type of development, learning, you don't have to go back to school. Many times mid-career professionals come to me and ask me, they're already a qualified accountant, and say, should I do another CMA or ACCA? Would it help me? And I said, don't waste your time. One good qualification is good enough. That's all you need. What you need now is your leadership development, by learning new things, by learning new technology, by learning new business models. And you can learn much faster, much effective way, much cheaper yourself. Like you are attending this session here, you could attend a lot of free webinars. I do free webinars regularly. You can come without investing any money. You could learn a lot. You could read blogs. You could watch short videos. There are a lot of thousands and maybe hundreds of thousands of clips educational for training. You can talk to the more knowledgeable people. As I said, next time you go to the marketing and sales, meet the sales or marketing director, ask him some question from a learning point of view. And not only that, they will help you, but it would significantly enhance your relationship with them, because you are not really showing your finance knowledge to them, but trying to understand the business. And everybody has something to learn from each other. Develop that attitude and you will be very successful. Okay, I'm not sure if there is any further question. I think all the question tabled here I've already covered. There are a few things in my slides. Let me cover that in the next 5-10 minutes. Now, for those of you who are struggling with the value creation concept, probably you need to look at other models which are more traditional, like this value chain analysis. This value chain analysis model is also very old, but very well established, highly strategic tool. Here you can see all the functions which you normally know. So if you look at the bottom, there are primary activities like inbound logistics, operations, outbound logistics, marketing and sales and service. Typical primary main activities to run a business, typically. On the top of it, there are support functions like infrastructure of the firm, IT department, finance department, HR department, procurement, other departments. Those are support activities. Notice one thing on this diagram. On the right side, there is a green band which is showing margin. And this margin is showing against all activities. The idea or main concept or philosophy here is that every activity you do in a business must create some value. It's not about the selling activities. It's not about the product and services you sell and you make margin. Even when you do some HR activities or IT activities or inbound logistics, there has to be a relationship with creating value. Ultimately, it should create more sales or higher sales value or higher profit. So it may take several steps to reach to that level. But look, the experienced and matured business managers do not run the businesses by calculation all the time. They develop a level of maturity. So all the so-called small business decisions, like to buy something or not to buy something, to hire something or not to hire something, or to entertain a potential customer or not to entertain potential customer, they already have a judgment. And the judgment tells that if you do this activity or this investment, this will create ultimately some value for the business. And the more and more they do, the more value is created. Now, of course, it's not a perfect system. There are many times mistakes. People hire wrong employees and they have to fire them. That's a waste of value. So some part of the value would be, it is inevitable to be wasted. But most of the time, you are creating a model where you create margin or value or profit against all the activities. That's the philosophy of this value chain analysis model. And it basically, in detail, if you look into this approach or model, it asks you to detail activity by activity to see whether these are value-added activities or non-value-added activities. That is how you improve the value creation process of the business. This slide shows you the different business models. As I said, the term business model is really relative. You may find different type of chart and graphs and templates against this. So basic idea of business model is to explain how the business makes money or how the business creates value. Okay, I want to stop here because this session is supposed to be 1 hour and I don't think there are any further questions. Let me take a look last time at the question box. Sometimes finance needs to make decisions, for example, cost optimization, which directly impact the operation department and presumed as negative. How to manage relationship if it goes towards negative direction? I think it's the political part of the organization or being in a business that first of all your relationship matters. And you must have noticed and observed that in real life, even in business, the people you already have good relations, it's always much easier and faster to come out of the conflict. There are conflicts always, but it's much faster, much quicker, and much more effective with the people who you have good relationship. And with people you don't have good relationship, even very simple issues become very complicated. So relationship does play a very important role. Second thing is, you need to be smart enough and matured enough to engage them. If there is a decision, even if you are authorized and you are fully responsible to take it, but you know that the other departments or managers will be impacted, engage them, involve them from the very beginning. Try to get their buy-in. Try to explain the rationale. Why are you doing it? Not only that will improve your relationship, they will less object. So these are few political moves in a positive manner, which really help to avoid such situations. Okay, next question is, who is the expert which is coming next week? No, you did not notice, Pankaj. We eliminated that part because I don't think based on the feedback that was not adding much value. So there is no external expert. We might still bring some expert, but it's not part of the regular format. I will try to bring some case studies. Maybe even I would send you some case studies in advance So you could go through them, and when you come back, then we could talk about those practical case studies. That would be the format of the next session. Okay, next question. As IFRS has come to existence, so to a time would come intangibles such as customer value, people, leadership, etc. will be brought into balance sheet. These awakening would become in due course of time. It may take time, but would be considered for valuation for the aforesaid tangible year after year human being is. Yeah, I got your point, Jamal. Do you know what is the standard time for one accounting standard to from the draft stage to the final implementation? It's 2 to 4 years. Unfortunately, accounting industry is very slow. Now we are part of it. We are the guardians of really regulating the industry, but we are extremely slow. And this is my open criticism. I mentioned that in my speech in front of the people from IMA, ACCA, and actually one of the executive director from IM Institute USA. But look, this is reality. Today, the business environment has changed significantly. The pace is very fast. And we, the accountant, the traditional accountant, still trying to run the business the old-fashioned way. It's not working. 2 to 4 years, I mean, technologies change, businesses change, models change. 2 to 4 years, we are just talking and debating about those things. So what you are saying, yeah, I could see that ultimately one day, all these intangible valuations would be somewhere in the IFRS. But when would that be? In my lifetime? Absolutely not. Maybe in this century, hopefully, but I would not be surprised if it is take even beyond this century. So we cannot wait that long, Jamal. The problem is that businesses are running fast. Businesses are expecting and demanding a lot from finance function, and we are not delivering. We are not delivering as much as we should. We are capable. It's not a matter of really capability. We are very talented. We are fully capable. It's a mindset. In the finance world, the people who really make a difference in the finance profession, they have very old-fashioned mindset. And you might disagree with me. Not many people have done it, and I have the courage to really say in front of the very senior, responsible professionals from these institutes. And privately, they have said there is truth in it. So I don't want to misguide you. I want to give you the fresh thinking. So many of you are younger. As I said, that don't think that IFRS are useless. We still need to run business through those IFRS, but try to identify the differences, try to develop an understanding and approach that businesses are different. How could we really make it serve in a better manner? That's the whole point is. And I don't have a chance to really explain a lot here in this program, but my strategic CFO program is fully dedicated, 12 sessions, 3 months, is on the strategy part, and there we go really in detail. And that program, I think there are 46 people, senior level. That is, you should do after you are done with this program. If you come to that program, in 3 months, you will develop more knowledge of business strategy than an executive MBA. That's my guarantee. You will develop more knowledge of business strategy in 3 months, more than an executive MBA, even from any Ivy League college. Okay. Okay, folks, so I'm running short of my time. I still see a couple of questions, but I would like to hold them for the next session. In between, in the meantime, if you have any question, feel free to drop in my email box, and I'll try to send you a couple of case studies, and then we'll take it from there. Thank you very much, and good night now. Bye.